Hey, I'm MindieKniss. This is the Daily Rage. Tomorrow should be quite a day. We have CPI bright and early. That is generally a very volatile number when those numbers are released. And then we have FOMC. It's my favorite day to trade. So with both of those tomorrow, it's going to be like Christmas for those of us who like a little volatility and a little movement in the markets. So today, let's review the FOMC 1, 2, 3 trade. It's a very simple setup. We're basically looking for three parts. Then we will take the trade. So part one is going to be up or down. That's on the initial reaction at the time when the announcement comes out. Move two is going to be the opposite of that. So if move one is up, move two, we'd be looking for it to go down. Then move three is the key. Move three is the continuation of whichever way it went on move one. So basically, it's going to go whichever direction it goes. There's going to be a pullback or retracement for move two. And then move three is going to be a continuation of move one. So I'm just going to use today's candles as an example. This is the NASDAQ futures. I trade the FOMC 1, 2, 3 on a 2-minute time frame. And you can use it on whichever is your favorite index to trade. So just for example's sake, I have marked this big green candle here. We're going to pretend that that was the FOMC announcement. Now, we're not talking about the press release that happens 30 minutes later, but the initial announcement. In this case, move one would be up. Then this would be move two, down. And this would be move three, starting to head back higher. Now, in this case, this would not have worked. The FOMC 1, 2, 3 is not a guaranteed thing. It would start moving up, but really no follow through, and then it crashed down. So it's up one, down two, up three. What I would do though, now obviously I have this whole thing, and when it's happening in real time, you don't have the luxury of seeing what happens. But if I were trading this and it went up one, down two, up three, I probably would have attempted a long here and clearly didn't work out. But what I may have done, looking at what then happened, is I might have considered this whole thing down two, and then, maybe up long here, which still wouldn't have worked out. But if you went up long here, clearly that would have worked out. So the main thing to remember is that FOMC is not like set in stone. There isn't an exact number of candles or a specific time to wait. It's kind of up for your own interpretation. And like I said, if I attempted this one and then I saw that clearly did not work, I might try something else. I'll usually give myself a couple different attempts during FOMC. So that would be up one, down two, up three. But what if this one was the initial announcement? Down one, up two, down three, not a whole lot of follow through. You could have maybe made a teensy bit of profit on that, but not much. You're going to have to use your best judgment. Much of it is based on interpretation. I may trade it differently than my buddy Hubert, who is the one who taught this trade to me. And everyone else in the Daily Rage community might see it a little bit differently. The key things that people screw up and that I have screwed up myself. One is not being patient enough for the move to play out. Sometimes everything happens so quickly that it's like, it almost feels like all in the same candle. It's up one, down two, and up three. It's going to generally take a little bit more than just one single candle to fluctuate. So give it the time to do that. Let the initial reaction happen. And the reason we don't jump in on the initial reaction is the same reason that it's not maybe the best idea to trade initially on the stock market open in the morning. Why? Because there's tons of volatility and that thing can move all over the place. Before you even get into the trade, you're basically stopped out because it jumps around so much, especially if you trade something like the NASDAQ. The other thing is not actually pulling the trigger. So trust the setups. And like I showed you here, it's not always going to work out. It's not always going to be like the most amazing trade ever, but it is a very, very simple structure that you can practice approximately every 6 weeks when FOMC happens. And it potentially could be fairly lucrative. Depends on what the market decides to do. So we'll see what happens tomorrow. As a reminder, the Apex 90% off sale supposedly is ending tonight. I say supposedly because they have had so many challenges with Rhythmic and Trade of Eight recently that they have just extended the sale and extended the sale and extended the sale, which is great. So, as an FYI, it may be ending tonight. While they have extended it recently, I wouldn't necessarily count on that. If you want to grab that huge discount, I recommend getting them today. There's a link and coupon code for you down below should you need those. I'm MindieKniss. Thanks so much for watching.